Hi everyone, this is Devins Financial Weekly Stock Analysis Newsletter. Today is January 22nd, 2017. Our newsletter is for your informational purpose only. We're not responsible for your gains and losses. Let's take a look at current market trend and our strategy. US stock market is still in a confirmed uptrend. I'm currently continuing long the market with the strong stocks and ETFs. But earnings season is approaching. A lot of companies are reporting earnings. Just watch out for the earning dates because the stocks tend to do the big moves, drop down or they gap down or gap up after the earnings. So there is strategy to deal with earnings. I will talk about that later. Let's take a look at indices. First is the German DAX index, still in the uptrend. It's making a flat base here. Anticipate its breakout from this flat base. NASDAQ, still near the all-time high, strong uptrend. SP 500, same, uptrend. Gold is making a reversal right here. Gold seems like it stood above the 50-day moving average for over a week. So it has a potential to reverse the previous downtrend and going up from here. Silver looks similar. It looks like it has stood above the 50-day moving average. We should be careful here as well because previously gold and silver also seems like they are reversing the uptrend and all of a sudden they reverse back down. So we just have to, if you are going to trade gold and silver, you just have to have a stop order. In case the reversal to the uptrend fail, you still want to get out. Gold mining stock, ETF, GDX, it's actually a little stronger, a little bit more stronger than gold and silver. It has been above the 50-day moving average for over 2 weeks. And making this little flat base looks like it may continue to go up. Crude oil consolidating. And crude oil ETF is the same. Energy stock ETF, a pullback near the 50-day moving average. We should watch, see if it can find support around 50-day moving average. China Asia downtrend, but looks like it's finding support around 3070, 3072, this is a reversal day. So the market may find support around this area. Now it's FXI, China Asia ETF, traded in Hong Kong and American ADR. So those are the big companies of China. There's a lot of them are state-owned companies. And this ETF is above the 50-day moving average, but still in this gradually shrinking trading range of the downtrend. So it's hard to say where this is going. It's not very promising here. US biotech, this is also a downtrend, and the trading range is shrinking. IYR, this is a US real estate. Looks like IYR, the real estate stocks are in the uptrend. It reversed the previous downtrend. Airline stock looks like it's about to roll over. So because of this high, this little peak is below the previous peak. So if it can break the 50-day moving average, break down, that will be confirm of the trend reversal. Right now, it's still in this ambiguity area, I will call it. Copper reversed back to the uptrend. A previously up downtrend and suddenly went back up a strong uptrend. Now it reversed back to the uptrend as well. Okay, this is a social media ETF. This one has reversed. Right now it's in the uptrend. Solar ETF reversed the downtrend, stood above 50-day moving average. It may go up from here. Utility is consolidating, it's just moving horizontally. Those are the ETFs. Let's take a look at the stocks. First list of stocks are the stocks near the buy point. They're within the buy range. So-called within buy range is within the 5% of breakout pivotal point. And the one highlighted in bold, that's in those in bold front, those are the ones newly added. MLM, Amazon, Adobe, and Alibaba. Be careful Alibaba though, it's about to report earnings on Tuesday. And second list of stocks are the ones that's out of the buy range. They're more than 5% above the breakout pivotal point. Those are still very strong, but they're too high to buy. And the third list of stocks are the ones removed. Those are the stocks under, I will call it institution selling based on the volume and the price action. And they are sold by big investors. So we remove them from our watch list. First, let's take a look at the stocks that's within the buy range. Adobe breakout pivotal point is 10 cents above previous high, $111.19. So this is very promising. So one push up, it will break out. Amazon is making a base right now. It's still working on the right-hand side of this cup base. Breakout pivotal point will be 10 cents above previous high, $847.31 here. You can buy in this range if it break out from $821.75. But bear in mind, if you buy from here, you may have resistance as it approach previous high. So just a risk to take. Alibaba is reversing the downtrend and stood above 50-day moving average. But Alibaba is gonna report earnings before the market open on Tuesday. So my strategy would be using the call option instead of the buy stock. Option will limit the loss to the potential loss to the premium, but still give you the upside potential. FCX, this stock had been a very strong uptrend, then went through the correction. Look, now the correction it hasn't completely finished the correction yet, but it rebounded from 50-day moving average. So that's a buy point, rebound off the 50-day moving average. MLM, this stock is making a flat base here. The buy point will be 10 cents above the high right here, $235. So it's somewhere above the $236. That would be a flat base. A breakout from that base, that would be a breakout. PRI, $73.15. That would be a breakout pivotal point. And so that's a long flat base here. And 10 cents, this is a Chinese stock, it's a pink slid, so the volume is low and risk is kind of high to buy a pink slid stock. However, this stock seems like it's already reversed the downtrend and going above 50-day moving average. And the company itself, Tencent, owns the WeChat, which is the social media platform in China right now. So it looks like most people who speak Chinese will have account with the WeChat. So this is a very promising company. The stock is traded in Hong Kong. For U.S. investors, only offer the pink slip stocks. Pink slip stock. So we have to take the risk. Things happen in Hong Kong, and overnight it can cost either gap down or gap up in U.S. So, and anyhow, the stock is still good, and the buy point would be reverse about 50-day moving average. That's a buy point. Right now, it's just consolidating along here. As long as the stock remains above 50-day moving average, it's still good to hold. That's a list of stocks that's within the buy range. The second list of the stocks that's too extended. Applied materials, breakout pivotal point right here is too extended now. Broadcom, we talked about this last week, and Broadcom has already reversed the breakout pivotal point here. And last week it was still within the buy range, but this week it's too high. So you can still hold on to the stock, but it's too late to buy. GKOS also above the buy range. HQY too high to buy as well. The buy point is listed here. Netflix and too high to buy. The breakout pivotal point is $129.39 here. After earning, it gap up, so it's too high right now. Now the third list of stocks we removed from the list. Goldman Sachs break down, surprisingly, with a very high volume, break down this little flat base, this little consolidation, break down with this high volume. That's not regular, the small investor selling. This is a big money selling because of the volume. Broke down. If a stock breaks down the support with a big high volume, that's a stock you and I should avoid. NTRS, after earning, gap down, huge volume. That's again institution selling. Avoid this stock. TAL, education. This is a Chinese stock. This stock after earning, it actually went up big time. However, as the stock approached previous high, there is a selling. So it was not able to stay at a high level. Instead, that Friday, it closed down and volume is pretty decent. So when the stock reaches previous high and the close and the low level of the day, that is a selling. And it was sold by investors. So you and I should avoid this stock. If you bought it previously, now is a good time to take a profit. It's an easy exit. If you haven't bought it, then just watch this stock for it, wait for it to form another base, then buy when they break out from that base. So for now, Tencent, TAL education, we just avoid this stock. Okay, those are the list of the stocks. And then these are the list of stocks on the earning watch. We need to pay attention to the dates of the stocks, especially if you hold those stocks. This is because stocks tend to make gap up or gap down move after they release the earning. And if it gap up, then congratulations if you hold it. But if it gap down, then you will have to take a loss, or you will have to give up a lot of the profit. So my approach for this is wrong spelling, too risky to buy the stock. My approach is to use an option to play the earnings. So for example, if I want to participate in Alibaba, I think the stock is strong, it has a potential to gap up after earning. Instead of buy stock, I will buy the call option. That will limit my loss to the premium of the call option, but still allow me to participate in a potential gap up scenario. But of course, because of the volatility, if the stock turned out not to move after the earning, then you may lose money in the option case. But I will rather play that risk because my risk will be limited. Well, if I participate in a stock, I buy the stock, try to use a stock to participate in the earning, there's a potential I may lose big time. So that's the reason I'm putting those dates out. I'm not saying that we have to participate in all of the stocks here. It's just in case you have the stocks on this list, and just pay attention to the earning and evaluate your position. See if you like to use option to replace the stock position or not. Okay. What to do in this market? I will continue long the market. I will sell the weak stocks and take small losses quickly. I will use the money to buy the strong stocks, but only buy in a breakout buy range. I will hold on to the winners, except for the stocks that show the profit-taking sign, like a TAL. I mean, when the stock reach a high level or previous high level, if the stock came down, and that means it's been profit-taking. So I probably will reduce my position in that case. Sometimes I just sell it completely. Other than that, I will just continue hold on to it. Now, I'm talking a little bit about stop order. In the future, I may give a more explicit example on how to use stop order to trade. Basically, right after I buy a stock, I will put a stop order below a support level. I will look at the chart, find out where's the support level, either the 50-day moving average or previous low, or in case of flat base, it's obvious in the low range of that flat base. That's a support level. Put a stop below that support level, or 7% below the purchasing price, or no more than 7% below the purchasing price, whichever is less, either support level or 7% below the purchasing price, whatever is less. I put a stop order. If the stock goes down and touch the stop order, I will get out. If the stock moves up, I will replace the initial stop order with a trailing stop order. The trailing stop order depends how fast the stock goes up. The faster the stock goes up, the less of the percentage of the trailing stop. If I sense the stock is coming near to a peak, and there's a lot of there's a high percentage of profit going on, and the stock has already been much higher above the 10-day moving average, for example, I will tie up my stop order. Sometimes I will use 3% trailing stop. So in case the stock going parabolic up wrong, so it's still going up, I will be in position. But as soon as the stock goes down, the trailing stop will be triggered, so I will get out. So this is a not exact science. You just have to, based on your experience. But the key point is, whatever long position you have in the stock, always prepare to get out. And either it's a take a profit, get out, or it's a cut the loss. Especially when the stock show loss, you have to cut the loss quickly. So that's just about the stop order. That'll be all for this week. See you next week.